Good morning. Welcome to Stock Market Today for Thursday, February 11th, 2021. I am your host, Dan Russo, the Chief Market Strategist, Chaikin Analytics. Find me on Twitter at DanRusso_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to ChaikinAnalytics.com/today. Sign up for a free email where I get a lot of the content for this show. We also give you daily stock ideas to consider upon further analysis. Hits your inbox every trading day before the market opens. Let's dig into it here. U.S. equities were mixed in Wednesday's trading. Discretionary materials and industrials underperformed. Energy, comm services, and healthcare, however, led the broader tape. Treasuries were mostly stronger with the curve flattening. Dollar was little changed against the yen and euro. Gold was up 20 basis points. WTI crude higher by 50 bips for its eighth straight gain, hitting its best level in over a year, more than 13 months. As we get to the desk this morning, however, futures are up 30 basis points. European markets are mostly stronger, following a relatively quiet session in Asia overnight. And just a reminder that we are coming upon the start of Chinese New Year, and markets in China will be closed for about a week. Treasuries are mixed. The dollar is little changed on the euro, but higher against the yen. Gold is flat. WTI crude is down 60 basis points. Let's dive into the charts. Not a ton to say here, different from yesterday. I think the point that I made yesterday still holds. Uptrend obviously still intact. If you've been bearish, you've been wrong. Are we stretched within the context of that uptrend a little bit? Yeah. Are the big leadership groups extended to the upside within their uptrends? Sure. Look at micro caps. But to me, as a trend follower who steadfastly adheres to that discipline, those are not sell signals. Those are don't be aggressive signals on the long side. Those are make sure your risk management process is in place, because from a stretch position, if we snap hard the other way, risk management will take you out. But I see a lot of people trying to call the top, and day in and day out, trying to call the top. Like, isn't that exhausting? Isn't that exhausting? And if you finally do call the top, if the market is 5-10% higher from where you started calling the top, were you really right? The answer to that is no. Early is the same as being wrong in this business, folks. A lot of people will tell you, well, I was right. I was just early. No, you were wrong. Calling tops and bottoms is hard. Trend following, evidence, not what you think should happen. Everybody thinks we're in a bubble and thinks we should crash. Market doesn't care. There's a bubble and people seeing bubbles is my view. In the near term, though, we're overbought within the context of an uptrend, maybe even stretched to the upside. Support 360 to 370 on the SPY, then 340. We're still playing for 413. Qs 315 support, then 300. And more important, the levels, folks. I've been hammering them home. The roadmap has been clear for months. Months it's been clear. The trend is up until proven otherwise. You can bang your puts all you want. I just don't think it's the right bet. Let's hit our market in a minute. What are we writing about? Well, more stalling activity as leading themes are overbought and extended. Then, okay, that's fine. Overbought in an uptrend. Breadth remains supportive of the bullish trend. Cybersecurity presents an opportunity. We'll look at hack. China, obviously a leading global theme, so we'll touch on that heading into Chinese New Year. And as I said, futures point to a higher open here today. Now let's get into the major indices from a power bar perspective. You can see that mixed bag again, similar to the dynamic that we showed you the previous day, but still solidly bullish here. 11-2 bulls to bears after the Dow adds 18 bips. S&P flat, 167 to 39 bulls to bears. This is actually strengthened in a flat tape. NASDAQ down 23 bips, 27 to 10 bulls to bears. Small caps actually lagged. First time we've been able to say that in a while. 795 to 66 bulls to bears. Bonds upticked. Energy, your best group. Remember early last week when I said energy looked oversold within the context of its trend? Probably presents an opportunity. According to the Chaikin Power Bar, small cap stocks and large cap stocks are strongly bullish. Let's hit our screens here. And this one's a little interesting because I'm not accounting for the rating. This is just a situation. You've heard me talk now. We're extended within the context of the uptrend. So what I wanted to do was screen the Russell 3000, regardless of rating, for names that are overbought, above their upper volatility band within Chaikin Analytics, but with weak money flow. Then the weak money flow is the kicker there, because a stock like Pure Storage is an example of what we're looking for here. Pure Storage, right? Nice consolidation. You get your breakout signal here at 20. Maybe you didn't take it. Maybe you waited for oversold. So you're buying stock at 22-ish. And now we got our pop to overbought. But notice what's happening. We're overbought outside the upper band with weak money flow. Could somebody be blamed for trimming here? Maybe feeding the ducks a little bit? No one's saying you have to take the whole position off, right? A lot of conversations that I have with people think they have to act all at once. They think they have to buy everything they want to buy all at once and sell everything they want to sell all at once. And that's simply not the case. There's no rule there. Right? If I don't own Pure Storage, but I think a way to think about this is to say market's overbought, had a nice run here. You can book some. Whatever that sum means for you. 10% of the position, half, quarter, number, you have to figure that out for yourself. I don't know what your portfolio looks like. I don't know what your risk tolerance is. But even if you still like Pure Storage, right? If you sold some here, what if we cycled back down to oversold at like $24 and you could add it back? I don't know. This is how I think. Like, this is the way I'm thinking about things all day on the names that I own for myself. Should I be trimming some up here? Where can I put it back? Is that likely to happen? But all within the framework of the prevailing trend, i.e. Pure Storage is still an uptrend, still outperforming, right? So that's the genesis of this screen today. Let's talk about our sector tracker movement in the last 5 days. Not a ton has changed here. Energy, Fins, Comms, top 3. Everything green. We like that. Don't love seeing discretionary at the bottom of the list. REITs move into the middle of the pack, but you know what? I can make myself crazy playing the day-to-day. The day-to-day doesn't bother me. Here's what I know. Everything's green over the past 5 days. That's good. We'll talk about breadth a little while. The secular growers have been joined by the right kind of cyclical sectors as leadership, while from a trend perspective, our defensives, REIT, staples, Utes continue to underperform. I don't know how to frame it. If I'm a bull, I don't know how to frame it better than that. As long as those trends continue, you have to stay bullish. If you're bearish, you're wrong. You've been wrong. Maybe you're early. Early is the same as wrong in this business, as I said. Let's hit our industry in focus, mining services. I've been a table pounder on commodities since the summer. A lot of people trying to catch on to that now. Financial Times last week had a story on it. JP Morgan, Goldman Sachs starting to talk about commodity super cycles. Welcome to the party. Mining services past 6 months outperforming by 28%. Very bullish or very strong power bar ratio here. 10-to-1 bulls to bears. Schnitzer Steel, Reliance Steel, and Commercial Metals, all with very bullish Chaikin power gauge rating. All three are holdings of a fund that is up and to the right. Now, near-term rating on the fund is neutral, but the trend is strong and we're outperforming. Give it a knock for being overbought here in the near term, but leading themes are overbought. You've been paying attention to what I've been saying all morning. The leading themes are overbought. Money flow is kind of mixed, but mostly bullish here in the near term. So, I mean, what I kind of see is a nice run, a little check back and now off. If you know, for the purists, I guess you can call that a flag. And now we're breaking top side of it. Commodity theme, metals, mining. I've been talking about it for a long time. It's there. There's 10 bullish stocks to take a look at, drill down, see if they fit your profile. We're not going to spend a ton of time here because It's mostly earnings related. Twitter, TWTR, neutral rating up 13%. I do own that one personally. Up 13.2% on the heels of their print yesterday. UAA up 8% following earnings. Tyler is just, I urge you, for people who are interested in businesses, I know everyone focuses on the technicals first, and that's great. But for anybody out there who's interested in businesses, read up on Tyler. I'm always fascinated by good businesses that prevail for a long time, that just kind of find their edge, find their niche, and maximize. Read up on Tyler, fascinating company in the software space. IFF, earnings specific, Devon, some sell side notes, loser side of the board are all earnings, Akamai, AKM. That's kind of interesting. I wonder what's going on there. I wonder if Fastly's maybe creeping in on them, FSLY. Be mindful of what's going on in that content delivery space. Bleeding edge type technology opens itself up to newcomers disrupting the old guard. And, at this point, Akamai could be considered a little bit of an old guard. So for those of you interested in Akamai, make sure you're aware of what Fastly is doing. FMC earnings, IPG, everything on the loser side of the board is predominantly earnings related, down to various degrees. Let's dive into the charts. Breadth is strong. What can we say here? Long-term percentage of stocks above their 200-day, 90%. Hard to argue with that. Anything above 60, we consider a healthy majority. Hard to argue with 90. How about the intermediate term? Nice rebound. 74% of stocks in the S&P 500 above their 50-day moving average. Now, anything above 60, we consider a healthy majority. How about short term? We don't show it here. However, percentage of stocks above their 20-day really snapped back hard. 74%. So short term, intermediate term, long term, percentage of stocks above their moving averages for those timeframes, all healthy majority. At the same time, we have the advanced decline line at the bottom of the chart here, trading at new all-time highs, right? Which generally precedes new highs for the S&P 500. In the past, that's been a solid predictor. So it's hard for me to make the bearish argument from the breadth side. I guess if you really wanted to split hairs, you could say that the percent above 200 days is just too good. Maybe. Okay. High class problem if you're a bull. So the breadth argument is tough to make here if you're bearish, right? And remember, the bears leaned on breadth for a long time, right? The bear case was only a handful of stocks are leading the market higher. It's not healthy. Leg of that stool got kicked out a while ago. You're still making that case. You're not paying attention. But hey, that's not my problem. I'm here. Anybody who's been listening to us has been aware of it, and you've been paying attention. Cybersecurity. I remember back when SAP blew up. SAP blew up back here, and the cybersecurity names got hit. It made no sense to me. I talked about it then, actually. I said, this makes no sense. SAP owns Concur. Concur is a software management program. Nobody's traveling, right? Expense management program, Concur. You've probably used it. This is why knowing the businesses is important, right? It's important because when the entire software stack sells off because of a dinosaur legacy business like SAP that owns Concur, right, has negative comments. Yes, when you know the businesses, you can step up and grab opportunities above the 200-day moving average, right? Hack now is consolidating above 60. I think it's, above 60, you have to consider it okay. We have a very bullish rating on Hack. And then finally, I've been a bull on China. Our rating backs it up. Take a look at FXI. Above the 200-day, above the 50-day, beginning to reassert on a relative basis. That'll wrap us up. I am not here tomorrow. Have a great weekend.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.